Hey y'all, so today you got your go-to real estate agent, Sondretta Green, here in Memphis, Tennessee and in North Mississippi. So, today we're not talking necessarily about buying homes or selling homes or you relocating here. Today, I just want to help my professionals that are realtors or if you are business owners. And definitely, we've talked about in the last video. So if you haven't seen it yet, or if you just pulled into this piece because you're a business owner, if you're a homeowner, you definitely want to go back and listen to the beginning of this where we were talking about those that have home ownership. So I have Kenneth Hearn here today with Hearn and Associates. He is a licensed enrolled agent, and he's going to kind of tell you a little bit about what that means. But I'm not a tax professional, and I definitely wanted to help you get the best tax break, the best tax incentives, and most importantly, just be informed. Knowledge is power, but it's only powerful if you are aware of it and if you use it. So I wanted to, Kenneth, can you go ahead and kind of explain what this enrolled agent is and just give a little snippet about yourself for those business owners that are out there in my real estate compadres?
As Sondretta stated, my name is Kenneth Hearn. I'm an enrolled agent. An enrolled agent is a tax professional licensed by the IRS. We have the same privileges to represent taxpayers before the IRS as CPAs and tax attorneys. The only difference is we cannot represent clients in court. If there's a tax court case, then we would recommend a tax attorney for you.
For my military people out there too, y'all know I'm prior military, and Kenneth it's a veteran-owned business as well.
Yes.
And so I also want to mention this disclaimer that every state laws and rules are different when it comes to taxes, right, Kenneth?
Well, only taxes, the state taxes.
Okay.
The IRS is national.
Okay. So see, that's why I got a tax professional in here. But there is some truth to what I'm saying. If you have your business, it's driven state taxes, and the rules are going to be different. So always consult your own, CPA there or your own tax professional in your state specific. But if you're here in Mississippi or in Tennessee
or
Arkansas, then you definitely can contact Kenneth, and I'll have his information in the video, in the description on where you can reach him or whatnot. But we wanted to kind of go back and digress because as we ended the last video, we were talking about those individuals that are not necessarily property managers. You don't have a company or whatnot, but you're just the average person like me, the average professional managing, building wealth. You got 5 homes and you're not licensed a realtor. You just got your homes. You don't need a realtor and you're managing them yourself. There are some important tips that Kenneth is going to explain to you. And if you haven't already seen my video with the attorney, Ryan Byrne, he talked about some of the same information for protection, touched a little bit on the tax benefits, but because he's not a tax professional, we know that Kenneth is going to cover that. So how should they structure? I mean, are they a business? I mean, what should they do as far as, tax? We were talking about LLCs and corporations. So can we talk a little bit about that for those that own multiple properties?
Yes. Even if you own one property, you should establish yourself as an LLC.
Okay.
And an LLC it's not a business structure. It's a tax structure. All right. And it's a protection mechanism.
Mm-hmm.
If you own, let's say you own one property or several properties, and let's say that there's a fire on your property, and it's determined that the fire was caused by faulty wiring.
Mm-hmm.
That means that you, as the owner, are responsible.
Mm-hmm.
If you own that property and you're not an LLC or a corporation or a partnership or whatever, it's just you're a sole proprietor on this property.
Mm-hmm.
Then that tenant can sue you. And in suing you, they can include everything you have, all your other assets.
Absolutely.
All of it. However, if you're an LLC and your LLC owns that property, They can only sue the LLC. They cannot touch your personal
Mhm.
unless fraud is discovered.
Okay.
If there's no fraud, it's just faulty wiring. They lost everything. They can sue the company, but they can't sue you.
Right. Your LLC, your corporate,
Exactly.
yeah, whoever you establish.
LLC, I look at it more like insurance.
Mm.
It ensures that there's a wall between you and your company. It's still your company.
Right. But it's just, yeah, it protects you.
Yes. If you have multiple properties, then that person can sue you for all your properties.
Right. Absolutely. So with that being said, I've been told that it's best to have each property in its own individual LLC. Can you structure it a different way? Is that an attorney question?
I think it is. An LLC can own an LLC.
Oh, okay.
So you can have an LLC owning the different LLCs.
Okay. I didn't know that either.
Yes.
I didn't know
and
that.
So if you got one LLC owning the other LLCs, then if this LLC here have some kind of damage or catastrophe, then it can't touch the other one.
Okay.
It's only this one.
Okay.
So.
Got it. Now let me ask you this: as far as tax purposes, how does that benefit the individual that has these LLCs?
An LLC, like I said, it's a tax structure. It's not a business structure. Let me speak of myself.
Got it.
Herron and Associates Tax Service LLC.
Yes.
I work for my LLC. I'm an employee of the LLC.
Yes.
I own the LLC, but I'm an employee of the LLC.
Right.
And I do it that way because as an employee, I'm taxed just like everyone else.
Right.
If I wasn't an LLC, an employee, if I was a sole proprietor on the LLC, then my total income is taxed 3 ways: Social Security, Medicare, and income tax.
Got it.
All right. The profit that's my profit is taxed all 3 of those.
3 times.
As an employee of my LLC, I pay myself every 2 weeks. Taxes comes out
from the LLC.
Yes.
Because you're an employee of your LLC.
Yes. Totally deductible.
Wow.
My payroll, my salary is deductible, as well as the taxes I pay deductible. Total deductible.
Wow.
The profit at the end of the year or every 6 months, however you want to do it, is taxed as capital gain, which is less than all 3 taxes.
Right.
All right. So I got the protection of the LLC, protecting my assets.
Yes.
I get a salary that's totally deductible. It's an expense to the LLC. And then my profit is only taxed capital gains, not as a sole proprietor, Social Security, Medicare, and income tax.
Wow. I'm going to have to watch this again, y'all. He's been putting down some great information. And so this not only pertains to the person that has rental properties, but it also pertains to you as a real estate agent, you as a business owner. And I would tell you, in Keller Williams, I have some great sponsors, because my sponsor, Chantel and Philip Hamilton, they told me out the gate, establish your LLC day one. And I was like, and I just did everything they told, because they said they made some mistakes along the way. Nobody told them. And they said, and so what they told me to do, I did it. I did it. And I know that I'm grateful for that. It protects me as if somebody wants to sue me on top of my E&O insurance as a realtor, but it protects me. It protects my assets. And then, and it'll also, protect you as a business owner as well.
Now, there is one requirement, though. There is one requirement. You've got to be on payroll. Okay. Because there is no business that run itself. Okay. No business, corporations, they do not run themselves.
Got it.
At least one person has to run the business. That person has to be on payroll.
Right. Okay. Y'all hear that? So, and what does that mean? Like, what does that look like? Because I have a sole proprietor LLC.
Yes. So all the money you earn is taxed. Social Security, Medicare, and income tax.
Okay.
That's what it means.
Okay.
You're paying a higher tax than you should be.
Right. So I need to position it where I'm an employee
Yes.
of my LLC.
Yes.
And I'm gonna get with Kenny so he can tell me how to do that. So y'all hear that? So see, I'm learning so much. I'm so grateful for this, and I know that you're learning too. So as far as the passive loss rules with real estate professionals and business owners, did we kind of cover that already?
We did. Here again, passive rule. If you are a real estate professional, you get to deduct all your expenses. If you are deducting your expenses on Schedule R,
okay,
then you are a tax professional. If you are deducting your expenses on Schedule C, you are you're not considered a real estate professional. You're
just an individual.
Yes,
just an individual.
That's correct.
Okay. So when it comes to business owners, so if I own, I don't know, my marketing corporation company, so that's my business or whatnot. So, or if I'm a real estate professional, then
all your expenses are deductible.
All my expenses are deductible.
Yes.
Got it. So that's what we're talking about here. These professionals.
Yep.
Okay, got it. Employment tax on real estate sales. At what point does this play a part? Can you kind of go into that?
Self-employment immediately denotes Medicare, Social Security, and income tax.
Okay.
Those three taxes on any self-employment income.
Okay.
That's those three.
So that's just what they're saying. Now, all of that is taxable unless you have established it where you are an employee.
Yes.
Then that's deductible.
Yes.
That's deducted from your business earnings.
You can't deduct the Social Security and Medicare. If you're self-employed, you can't. None of that is deductible. None of it is.
Okay.
But if you are an employee, all of it is deductible.
Got it. Wow, this is some great nuggets. So tell us some of the things that we can deduct as real estate professionals or as business professionals, business owners, when we own our own business. Like, what are some of the things that we can deduct? I mean, I know we have mileage, we got gas, we got clothes, we got the offices, and I know every state is definitely different because this is state driven.
Except for the IRS.
Okay.
The same is all across all 50 states and territories.
Okay.
Same. Let me give you some misnomers.
Okay. Yes, that'll be great first.
Clothing.
Yes.
Clothing. The IRS states that any clothing that you wear and in your business that you can wear at church on Sunday, it's not deductible.
It's not deductible.
Not.
Right.
In order to make your clothing deductible, put your name on it.
Right. So
now the uniform.
Right.
It's deductible.
Absolutely. So when I go out and buy those things that says my company on it, or I put my company's name on it, now it can be deductible.
Even if the cleaning then becomes deductible. You purchased it, you paid for it. Now you have to maintain.
You got to maintain it.
It's deductible for as long as you have it.
Okay.
Another misnomer: mileage. I get this all the time. My clients bring in, well, I drove 12,000 miles for the year. Okay, it's good. Now tell me how many of those miles were business miles?
Right.
How many of those miles you put on that vehicle was to earn a living from?
Right.
You driving from the office to get lunch, don't count. You driving from home to the office, don't count. It has to be to earn a living. It has to be to earn the income.
Wow. So when you're going to show a house, or
yes,
when you're going to meet a client,
yes,
or wow. Now I knew, because I have a mileage tracker. My sponsor said, make sure you get this mileage tracker, because I was in school at the time.
Okay.
And I'm going to real estate school, going to class, and that's, but that's neither here nor there. What I thought was like, okay, I know that there's some miles, because I have that mileage tracker, and I say, personal, business, personal, personal. So I thought, okay, you leave it home.
No.
You're going, or some people may think you're leaving home, you're going, but it's actual business perform. Now, if you're meeting a client at a restaurant discussing business, because sometimes we do meet for lunch or brunch or whatnot, and then that's business.
Yes.
If you're meeting to discuss business, but once you leave that business discussion or business transaction, then you're going back to the office or back to home. No go.
No.
Wow. So what is the best way? Okay. So then that gives me an understanding of that gives us an understanding of how to track it in our mileage trackers.
Yeah. Another misnomer, meals. There are two ways to deduct meals.
Okay.
One way is if it's in the here again, let's say you're meeting a client. Even if you're paying for the meal, then it's deductible, because what you're doing is that meal is in the avenue of earning money.
Right.
So that meal is
it's business. It's a business meal. It's a business meeting.
If you're meeting your sorors or your bros or whatever.
Yeah. No. Yeah.
No.
On your lunch hour.
Yes.
While you're working, this is you having lunch. Now, how about if you're eating lunch? Like you got your meal for the day, you're working, you went to lunch.
Your lunch is not deductible.
Okay. Only for business purposes.
Now, if you're having a meeting of employees and
a working lunch.
That's correct. And you are discussing how you all going to go forward to earn all this money. Mm-hmm. Then the meal that you meet with your clients is 80% deductible.
Mm-hmm. Okay.
Not 100%. No, Scott. No. It's 50%. 50% deductible.
Wow.
50%. If you got your employees and you all are discussing how you're going to go forward to become millionaires and make all this money, and you're establishing all these rules, that's 100% deductible.
Okay. Wow. I did not know that. This is good stuff. This is great stuff. Anything else as far as those?
Have you ever seen these? I like this. Have you seen vehicles with these place cards on them? That's
the decals and all that stuff. Uh-huh.
Some people will put those on there and think that they can deduct the car payment, insurance. No. Mm. No, you can't. If it's a company car, and there again, if it's a company car, only business miles or can be still. You can't deduct going home, even if it's a company car, you can't.
Mm. Wow, this is some great information. So now we're going to get into, a lot of us go to conferences. I know Keller Williams is having our conference next month in Atlanta, Georgia. And so I'm going to be driving. Some people are flying. I know, we had to get tickets for the conference fees, just so much money and stuff like that. So how does that tie into?
That is professional development is a tax deduction.
Yes. Got it. So all your training, all of that stuff like that.
That hotel you got there, the meals you ate there, traveling, the taxis and tips, all of that's deductible.
Just keep your receipts.
Yes.
Keep your receipts. So how about professional fees, membership fees, to maintain our licenses and stuff like that?
They're all deductible. Okay. Yes.
And then equipment and supplies to
as long as the equipment and supplies are used for the betterment of the business to earn the deductible.
So like my tripods and my GoPros, because I'm doing videos for real estate and this, that, and the other. Or if you're a marketing person and you got to get printers and copiers or whatever the case may be, then you're buying that. But it's deductible.
Also, how the phrase is, some equipment you want to depreciate.
I have heard of that.
Some you do. Say you got this. Let's say you in the printing business, and you got you buy this big printer because this is the
state of the art.
Yes, and you want to depreciate that. Well, and actually you can't. You have to depreciate it. You cannot deduct it as a one-time deduction.
So you got to keep each year.
Yeah.
Okay.
Small printer that you use at your desk. What, $100, $500, whatever.
Yeah.
Then deduct it the year you bought it.
Okay.
And be through with it.
Okay. But these big, huge, like if you're a business, you got
restaurant business, they got these refrigerators and all that depreciate.
Got it. Well, y'all, this concludes our interview. I told them initially I didn't think we were going to get through all of these questions, but it just was so much stuff, so many great nuggets. So, Kenneth, thank you so very much for coming. Thank you for your time. Initially, this was going to be a big class that we did with people, and we ended up not being able to coordinate that. But I said, you know what? There's so many people online. You can reach more than just the people in the room. So this actually worked out the way it was supposed to work out. So I will have Mr. Kenneth Hearn's information in my description. So if you need to reach him for tax, business questions or whatnot, and then we will definitely be able to connect you.
Yes.
And I hope that you all enjoyed this information today. I hope that it is beneficial for you, and so that you can move forward and make wise boss moves and move forward with wisdom and knowledge that you can use to be powerful. I hope y'all have an amazingly awesome day.